Hello and welcome to today's video, which is called Oil Reversal and S&P 500. Thank you for liking, commenting and subscribing to the YouTube channel, and for, of course, talking on Twitter. Remember that the free subscription on my site is the basis, and of course premium clients are getting way a lot more information on an immediate basis. So let's move into the big picture as regards the economy and stock market. Friday we got quite bullish housing data, not just permits but also starts, which had led to retreat of short-term rates. This kind of hawkish effect, though, wouldn't last, and the long end of the curve, which barely moved Friday, would force short-term yields to retreat. This is the larger mechanic to play out over the coming weeks. When it comes to interest rate sensitive sectors such as real estate, financials from regional banking to big banks, utilities, and also Russell 2000, this would be benefiting all small caps. So whichever index you would be looking at would welcome easier financing news, and it had been seen to a degree also in biotech. So Russell, whatever the number you pick there, that's been the key weekly beneficiary, doing better than Nasdaq and S&P 500, which means we are seeing some kind of a rotation where cyclicals had been pulling the market ahead, and that's been quite true, especially on Friday. We had also seen precious metals consolidating the sharp gains and not really running higher, which had not been any surprise to clients, and had been also made apparent from the free daily article. We had also seen copper coming back above 372, which I had been also talking in Friday's free version of the daily article. We had seen risk-taking returning to markets, and that will be true as the Q4 rally keeps unfolding. And now, as market breadth metrics are improving, it's about the strength of cyclicals to Nasdaq rotations. Remember, scroll back into history how well my early November calls for soft landing trades revival had been working, and you had seen it featured in the real estate and regional banking charts, which I had featured on November 5, and I will be again revisiting these charts in the nearest daily analysis, so make sure that you review what I think about these sectors going forward. For now, let's move into gold and silver, which, as said, had delivered Friday. Look at the volume. It's not a hallmark of a reversal, but rather of a temporary upside rejection, and that concerns both gold and miners. As mentioned already, copper, this is, together with other base metals, providing a slightly bullish hint to this chart, a confirmation there as well. And now to the, in the title mentioned, crude oil reversal. It has been quite a sharp one. Note the high volume of last 2 days, and the budding accumulation is underway but I'm not looking for overly sharp gains way too fast. 78.50 resistance would be beaten, but it would take good 1 to 2 weeks at least. So for now the chart is positive, but bulls should temper their price appreciation expectations. That's been all that has been covered within the latest articles. I'm pretty sure that you have been familiar with the intraday calls that have brought stellar gains when it comes to S&P 500 and DAX. So keep on enjoying and benefiting. Obligatory disclaimer and my wishes for a nice weekend.